So today's lesson, we're going to go into another cash book because we had our main 3-column cash book, but there is also something called a petty cash book. So let's go straight into it. So if you remember, the cash books dealt with all cash and bank transactions. However, there is a petty cash book for the extremely large businesses that only deal with small cash payments. So which means there is no bank transactions at all, or there are no bank transactions. All the petty cash book deals with is the cash in hand. And what is that used for? To make very small payments in cash. So, you know, when you have a large business, there are many transactions, cash and bank transactions, that if the business has a cashier or an accountant that deals with those cash transactions, they will have a lot of entries into the cash book. So if it is a very large business with a lot of transactions, what they may choose to do is to set aside, you know, the very small transactions in terms of the payments, extremely small transactions, and they will get another cashier or a junior accountant to deal with those very small payments. Now, what are they going to be paying with? That is what we're getting into. There is something called a petty cash float, a fixed amount of money that is given so that they can make these payments. And it is an Imprest system. Don't sound too, you know, it's like, oh my gosh, whoa. It's very simple. What is an Imprest? It is a sum of money that is put aside for a specific purpose. In this case, it is put aside so that we can have a petty cash float or fixed sum of money from which the petty cashier can make these small payments. How do they receive it? They receive it from the main cashier. So what we have is the main cashier will go to the bank and get the cash in hand, and then that main cashier would take that money to the petty cashier, give a certain amount of money to the petty cashier, small amount, and then that petty cashier is going to make all the payments, you know, like travel expenses, motor expenses, small payments to debtors and the receivables and the payables. And any payment that is a small amount set, that is what they will do. And then what will happen eventually is they pay out their money. So they would reduce the amount of money they now have in their petty cash float because they have, during the month, paid out these small payments. Okay, so the first thing we start with, I don't know if you saw any example, there was a piece of paper. We always need to have source document. So every time somebody acquires this small payment from the petty cashier, the actual cashier will have to make up a petty cash voucher because it is a source document, the evidence that a petty cash transaction has taken place. So this is just a very brief example. They had many templates, so you would see it in different ways. But the basic information that is needed, of course, with all source documents, you must have a number, a reference number, so that you can go to that source document and see the evidence of a particular transaction. So what we have is 12 is our number. Another basic information would be the date, what the date of the transaction, the amount. The petty cashier is required to make a payment of $35 to Jackie Doe. Why? Because it is a refund for overpayment, for example. Okay, so the account will be Jackie Doe's ledger account. The SL125 is the reference where in our ledger, our sales ledger, are we going to find Jackie Doe's account? Sales ledger, page 125. So this information makes it easy for you now when you have to go and post it into the ledger account. You will go to Jackie Doe 125 and you will post that Jackie Doe was given a payment of $35. Reference number, petty cash voucher 12. Okay, and these are just the normal things, you know, like signatures and all that, because documents, official documents should be authorized. You should have done that in POB if you do POB. That is the basic things in terms of contracts and documents. Okay. So the petty cash book, as we said before, it acts just like a cash book where you have a debit side and a credit side. Like the cash book, whenever they received, they had it on the debit side, and whenever there was payments, they had it on the credit side. So the petty cash is divided into two sides, debit and credit. However, since the petty cash book deals more with payments and cash payments, to be more specific, there are a lot of payments that they make. The credit side is bigger. So you see with the cash book, it tends to be equal. All other T accounts tends to be equal, where you have your debit side and your credit side equal, and they have the same details, which would be date, detail, folio, and the dollar amount. And you put debit for the debit side and credit for the credit side, equal. The petty cash book is not going to be equal because it deals more with the payments. So what will happen with the petty cash book is you're kind of going to shift the debit side. Is going to be a smaller column, and that will be for the receipts of the cash, which is your cash float. So remember, we talked about the main cashier giving the petty cashier a certain amount of money, fixed amount of money, to make the small payments during the month. So that will go on the debit side. And then we have the credit side on this side that will have the payments of all of the expenses. So what you're seeing there, we have our color coding, the debit side, smaller column. Credit side, larger column. But now we have this big space in the middle, this white space, and you're probably wondering what happened there, because what they did is they went to the side, debit side got smaller, credit side got larger. The middle space is basically for your date and details. So unlike the other T accounts and the cash book, where you will have date, details, and dollars on both sides, you will just have one middle column for date details, and then you will put the dollar amounts, whether it be on the debit side because you receive the float, or on the credit side whenever you make any of your small payments. So that is the middle part, date and details. And that means that your petty cash book, instead of being divided into two sides, like it's a T account, T, it will be divided into three sections, let's call it sections, with the debit side, the credit side, and in the middle would be your date and details. So once you just memorize this, very, very, very easy, okay? So you just have a middle white column now dividing the debit side and the credit side. So as we said, you know, the debit side would be for your receipts of cash, which would be your petty cash float, that fixed amount of money that you get from your main cashier to do your payments. And this side, as I said before, would be divided into receipts and then folio. Receipts would be whenever you receive your cash float. The folio is where did you get it from. So let's see. 2021, 1st of January, you received your petty cash float. Your petty cash float in our example is $300 cash. So you see, we put the $300 under the receipts, the debit side. Your dates and details were over here. January 1st, cash. You received cash, $300 cash. What is the journal that you would have gotten that cash from, or where did you get that cash from? The main cashier who deals with the cash book. So your folio is basically the $300 came from your cash book. And that's it basically. So every single time you receive your petty cash float, any money from your main cashier, this is what you would have. The date you received it at, cash is your detail because we only dealing in cash. CB meaning cash book, because the cash comes from the cash book. The credit side of the cash book is credited whenever we take out the money, and the amount, and our float is $300. So very easy. This is what you do every single time you receive. And then all the other transactions would tend to be payments, very small payments. So you would divide your credit side. First thing you would put would be the total. Total meaning how much was your payment. And then the credit side is divided into all of the expenses. So it's called the analysis columns. The analysis columns are given to you. So the examiner or the exam question will state, these are the expenses that I want you to represent in terms of the columns. These are the accounts that I have. So for example, the analysis columns, all small petty cash payments. Example, motor expenses, travel expenses, cleaning expenses. I went really, really fast there. But whatever they give you, motor expenses, travel expenses, cleaning expenses, you will have a column for them. And then you see last columns they may put for ledger accounts. Who are your ledger accounts? You may have payables or receivables that you make small payment for. Like we had seen when we did our petty cash voucher, say for Jackie Doe. Jackie Doe was a receivable, but she probably paid too much, or she returned some goods that she had paid for previously, but there was an overpayment. So what happened, since it's a small amount, she just came in and the petty cashier would have just given her that or made that very small payment. This would be the column where we would write, because it is not a motor expense, it is not a travel expense, it is not a cleaning expense, it is not any type of expense. It is a payment to a personal account, which would be a receivable or a payable. So you would have the ending column after you have put your expenses. You will have your ending column now, and your ending column will be divided into two. The last column, ledger accounts, for example, Jackie Doe. And of course, you need the folio to know which, where you're going to find Jackie Doe's account. Remember, we had said SL 125, I believe, was our example. So you would just put that folio, SL, and the page number if they give it to you. If they don't give it to you, SL, if it is a receivable. If it is a payable, it will be PL and the page number, or just PL, to show you that you go into the purchases ledger and you enter the amount paid to that particular payable. So these were what your columns would look like. Once again, you start with your total, and then they give you the analysis columns. The analysis columns would be all small petty cash payments. For example, motor expenses, travel expenses, cleaning expenses. And those are your expenses. They only give you 3 expenses. So that is all that there will be for that. And then the last column is reserved for your ledger accounts if you make any payments to your receivables or payables. And that is divided into 2. which would be the last column for the actual ledger account, example, Jackie Doe, and the column before to tell you which ledger you are going to find it and which page if they give you the page. So you would have either SL or PL. SL for receivables, PL for payables. So let's see, they're all dollar signs except for the ledger folio. So you will have your dollar columns. You would see in some examples, this receipts, I had my dollar sign up here, but usually we can put it underneath, just like we have here. But once you know it is a monetary amount, so you're putting these dollar signs to signify the monetary amount. So let's put some lines there because we are going to show you some examples. This, I do not have the question for you. So the question, this is just example. So you're going to have to take my word for it. I am telling you that on January 7th, we paid cleaning expense. Now what you're seeing here is you can have an extra column for the petty cash voucher to give as evidence, you know, voucher number 12, voucher number 21, that is the evidence. But we are not going to do that. We are not going to do this column. We're just going to deal with the actual date details and then putting it into the expense columns. So we have a cleaning expense. My question gave me this, January 7th, cleaning expense. For each payment that you make, you have to put it or enter it into two columns. First column, your total column. So how much it was, my question told me it was $50. So we made a payment of $50 for the cleaning expense. So we put it under total. What do you think would be the second column? It will be the particular expense. So cleaning expense, you have a column for cleaning expenses. So the second column would be $50 under cleaning expense. And that is all it is for the actual petty cash entry for small payments. Each time you make a payment, enter the date, enter the expense, put the amount in the total column, and then put the or enter the amount in the actual specific expense column. So we're going for another one on January 10th. We had motor expenses, total column, the total $30. So we enter $30 we paid, and we also enter it in the motor expenses. Going to quicken up because this is the extremely easy part of it. So we have January 19th, taxi fares, $20. You put it in the total column and then you look for the specific column. Taxi fares will not fall under motor expenses, nor cleaning expenses. It will be a travel expense. So they gave you one category, travel expenses, taxi fares will fall under that. So you will put the 20 under the travel expenses. And then we have another transaction, January 21st. Ooh, I wonder what happened. Jackie Doe, our Jackie Doe, but this time I used a different dates and stuff, so it is not connected to the voucher that I had previously shown you, okay? On January 21st, so they will have another voucher for her on the 21st. Jackie Doe, we paid her $40. So of course we enter the $40 under the total. Where else do we have to enter it, or which is your second column? Your second column, it's a ledger account, not one of these expenses. So you will enter the $40. Remember, this is dollar sign, not name. Details would be her name. How much did we pay her? $40. And then the ledger folio. Jackie Doe, they would have told you she is a receivable. If she's a receivable, it's SL. If she's a payable, it will be PL. So Jackie Doe is a receivable that we refunded to again. And the page number is 121. So this folio means that we will go to the sales ledger book and we will find Jackie Doe's account, T account, on page 121. And this is your little reference. Once again, if they do not give you a page number, don't go making up anything. You're just going to have SL. Okay? So now we have finished that one. Let's see any other transactions. January 21st again, gas. So we paid somebody, it could be the delivery man or whatever. We gave him a certain amount of money so that he can get gas up the car, right? So he can get fuel. How much it was? $70. Ooh, that person real traveling, right? Probably real deliveries. They go in all kind of Toco and all kind of places that far, 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 far off. Don't say Tobago because you can't drive to Tobago. All right, so January 21st, gas. Gas will fall under which one? Motor expenses, travel expenses, cleaning expenses. Gas, fuel is usually a motor expense. So not a travel expense, because it's not that you're saying that you're traveling to somewhere, you know, it's like to go to a meeting or anything like a taxi fare. This is gas, and we know that gas is used to allow the motor vehicles to be used as assets. So it is an expense directly related to the asset. So that would mean that it will go under motor expenses. So you have 70, 70. So once again, you would realize that all of them, all the payments, 2 columns, every single one has to go in the total column, and then you will put it in the specific expense column or the ledger account column, in which case you will also have to put the folio, which would either be SL or PL to represent receivables or payables. So after you have done that, as I said, this part is extremely easy. What you're going to do is you're just going to total everything up. So you will total this and you will get your total 210. Total this, 70 plus 30 will be 100. 20 by itself, 20, 50 by itself, 50. This is not a monetary amount, so you ain't totaling anything. And then the $40 here by itself, $40. And this is the first and most easy part of doing a petty cash book. That is just the entry. And don't worry, usually, if not all the time, I don't think I've ever seen where they give you a petty cash book question and not giving you the format in terms of the actual document in these 3 sections. Of course, it is not going to be color-coded. Sorry about that. It is not going to be color-coded, so which means that you're going to not see it like that or even grayscale. You're going to see it like this. So you're really going to need to know which side is the debit side, which side represents the credit side. But that is basically very easy, because the only thing that goes over here for receipts is whenever you receive money. And the main money, it is very rare you receive anything else, but the main money that you always receive because you need it is the petty cash float. And that petty cash float would go on this side, whatever it is. It's a fixed amount, so it's 300, and you're supposed to maintain your petty cash float as 300. So every time you spend, you're going to have to restore it. Okay, so every time you spend, you're going to have to restore it, which is what we're going to do after this. Okay, everything else would be payments, and as we said, you just put date, the detail will be the expense, and then you enter it in 2 columns, your total and the specific expense. Okay, so what we see here would be an example. All right. right? So this is another example. Same concept. What is your float? 300. It's over on this side. And then these are all of your expenses with one personal account. So that is our king. And you would see in this case, he is a payable, and that is why we have PL. Okay, but it is the same basic thing. Motor expenses, travel expenses, cleaning, same thing, the ledger accounts, and then you just put your dates and whatever the expense is. So this is just an example. Remember, 3 sections: your debit, your credit, and your middle column for your date and details, and you're good. The credit side will have your analysis columns. Easy, easy, easy. After that comes the most challenging part, and once you just learn it and the process, it is not even that challenging. Petty cash book is a topic that is extremely nice and easy, especially in entering just the payments, the transactions. You get a lot of marks from just doing that. But we know, as I said before, once you make the payments, you have to maintain your float. So in our examples before, you saw our float was $300. So if you spend or you take out money from that 300 to make your payments, you're going to have to restore it or put it back. So that means this topic here is reimbursing or restoring the petty cash book. So as we said before, the Imprest amount given is for a specified period. It's usually for a month. Okay, so our example was like the 300. You debit your petty cash book because you have increased your money in your petty cash float. So you have your petty cash book debited and of course your cash book credited. In our example here, we have $700 as our float, and it is spent. Okay, and how much is spent? Because you only have 175 remaining. So that means how much was actually spent was the 700 that we had before. The remainder is 175. So which means we spent $525. We need to put that back. As we said, we have to restore it or reimburse it so that it gets back to the 700. How much do we have to put back? The amount spent. So if we spent 525, as we saw there, we worked it out because you had 700 before. Then at the end of the month, you only had the 175. We would have been entering it in the petty cash book. So we would have total that we spent $525. That means to get it back to the 700, we are going to have to put back the amount that we spent, which is the 525, to restore it or bring it back to the 700. Okay? The only question now is, when do we restore the float? Okay, so we already established it has to be restored. How much in our example has to be restored? 525. When do we do it? So the amount spent must be reimbursed to restore the Imprest to the initial amount, which was the 700 in our example just now, right? The owner or manager may decide to either restore it at the end of the month. So that answers that question. When? It can either be at the end of the month or the beginning of the following month. So once the owner makes that decision, and what you will see here is on the receipt side, we received our petty cash float, 300. So we're back to the petty cash of $300. It's on the debit side, right? And then during the month, we in January 2011, during the month, we have these expenses. And as you can see, the expenses entered on both columns. Okay, so you have the postage total column and postage column. Travel expense, total column, travel expense column. Our king, total column, ledger accounts column. So we do that as you just learned, and now you would total up at the end. You total up on this side, you get 96. Just double check that your totals here, as you would have totaled each of these columns, just add up your totals and you should also get the 96, right? It works both ways, just saying, okay? All right, so you have 96. $96 in total was spent. What does that mean? That you no longer have the $300. You spent $96. So you would have the difference of the 300 minus the 96. But you don't have to work that out. That is not what is important. If you spent $96, how much you have to restore it by or return or get from the actual main cashier, you have to get $96. However much is spent is how much you have to get back to restore your float to the original amount of $300. So how would you do that? This case, they said you're restoring it at the end of the month. So one time you're going to go to the end of the month, which is January 31st, and you're going to put back in sound effects. You're going to put back in the amount that was spent. So cash, you're going to receive $96 from the main cashier. So since you're receiving it, it will go on the debit side. So $96 they received. Where you got it from? Your cash book. So really and truly, I don't have it here, but you should put CB here. All right, maybe I'll go and I'll write it in and there you go. All right, so you have CB. So then you will, after you have now restored your cash, so looking at it here, you have now put back in your $96. Then that means you are now done. You've restored it. And what is the last thing you do after all your other transactions? You balance. Okay, so the next step will be to now close off your account, balance your account. So January 31st, we still at the end of the month, balance carry down. And how much is your balance? Since the debit side has the greater amount, totals will be $396. So because it's $396, therefore what you would have would be the difference, $396 minus the 96. You're missing figure 300, which means by putting back in the $96, you end up right back with your float being $300 as seen here. So we good. And then what you would do is, just like all other accounts, what you will do is you will just have to go on the opposite side, which is your debit side, and put your balance brought down. But since our date and details are just this middle column, you will just go under your totals. What is the next month or the beginning of the next month? February 1st, balance brought down. And as I said, the amount has to go on the opposite side. So you have your balance carried down on the credit side. So it will be over on the debit side, $300. And this shows that you start off on February 1st with your float $300 to make your payments again during February. All right, so here we have the same example. The difference is that they decided that instead of restoring it at the end of the month like we did previously, they are going to restore it the following month. So because we have already, we've done our totaling and everything, we spent $96. So we know we have to restore the cash float with $96. We are not doing it this month. So that means we have ended all transactions. Whenever you have ended all transactions, what do? You balance. You balance for the end of that month. So unlike when we restored at the end of the month, we had to restore and then balance. Because we are not restoring this month, that means we just balance. So we're going to go, and how do you balance? You put the dates, you balance at the end of the month. So January 31st, and then you will have balance carried down. Your balance carried down will be on this side because, of course, your debit side has greater amount, which is 300. So both your totals would be 300, just like all other accounts. And therefore, your missing figure would be 300 minus the 96, which will give you 204, which means you are ending the month with only having a balance of 204 because you spent $96 out of the 300. Okay, so that means that we're going to start the month February 1st, balance brought down. How much do we have? 204. So on this side, 204. But we are not supposed to start a month with a balance or our float as anything less than the 300. Remember, we must always have a float of 300 for the month to be able to make our payments. So which means that on February 1st, we only have 204, but the owner said what we are going to do now is on February 1st, now we are going to restore our Imprest for the rest of the month. How much do we have to put back in to restore it? If we only have 204, we had spent the 96, that means we have to now put in the $96. When? On the 1st of February. Okay, so February 1st, cash, because we are now receiving the $96 on February 1st from the main cashier. How much did we receive? Is the $96 that we needed, $96, and we're going to have to put our folio, which is CB. Okay, and this is basically how you restore it at the beginning of the following month. So just to summarize, you have two options when you are restoring your cash float. You either restore it at the end of the month one time, or you wait until the beginning of the following month and then you restore it or reimburse or put back in the money that was spent. So for restoring at the end of the month, restoring at the beginning, it does not matter. The first thing that you will do is, of course, find out how much you spent by totaling your total columns. Okay? It's the same thing. Where the difference comes now is when you're restoring it. If you are restoring it at the end of the month, what that means is that you're going to have to restore or reimburse at the end of the month. So you do that one time. And then after you do that, then you would balance, because it's only after you've restored you can now balance, because you have no more transactions to do. As opposed to now, if you're going to restore it in the following month, that means that you have no transactions to do because you're not going to restore it at this month. So you're going to just balance one time. And then when the following month comes, after you have put your balance brought down, you brought down your balance, then you are going to enter or restore your cash balance. Whenever you reimburse, whether you reimburse at the end of the month or you reimburse at the beginning of the following month, you always debit your petty cash book. Okay? So you're debiting your petty cash book. If you also have to do a cash book, you're going to credit that. Okay, but if you're only dealing with the petty cash book, you're just concerned with going on the debit side and you will debit it whenever you do it. If it is at the end of the month, first thing you will do after you have total, because you always total the amount that was spent, you reimburse. So you're going to reimburse first the end of the month by debiting the petty cash book, restoring it, the amount spent, you put it back. And then because you have done that and there are no more transactions, then you will balance. If, however, you choose the option or your owner decides on the option of at the following month, then you are going to, after you have total, balance one time. So you're not going to restore because they said to wait until the following month. So you have no other transactions to do. So you are going to balance off your account. And as you balance off your account, you carry down, you bring down, and then you are going to restore by debiting your petty cash book. So this is the example of the differences. Once again, the color coding, just look. Reimbursement at end of the month, first thing you do, and then you end with your balancing. If it's the following month, you balance first, and then afterwards you would restore or reimburse. So let's end with an example. And we have our petty cash book. What we're going to do is we're going to put our totals. So we have our receipts folio, dates, details, total, analysis column where they told you, here they told you. So the example, enter the following transactions, which is kept on the Imprest system using the analysis columns. You see, they give it to you here. Stationery, so we put stationery, traveling expenses, so we put that, sundry expenses, or sundry, some people say sundry, I don't know, I will say sundry expenses, and then of course your ledger account and your ledger folio. So we have ruled this out. You have your dollar signs, you see under receipts you have your dollar signs and total and everything except your ledger folio because that is not a monetary amount. And very quickly, date and details, we are going to go through each transaction because it's really easy until you reach your balancing. So 2015, May the 1st, received the Imprest of 400. So cash is your detail. You go on the debit side. How much did you receive? 400. Your folio would be cash book. Okay, so next one, May the 4th, purchased envelopes, $25. So that means your expense would be envelopes and $25 would be on the credit side under total, and also envelopes would be stationery. So you would put 25 under stationery. Then we have paid taxi fares, $37. So that is May the 9th. Taxi fares, what are taxi fares in these? It will be traveling expenses. So you would put the 37 under total and under traveling expenses. Too easy. May the 12th, purchase coffee and tea, $53. So May the 12th, coffee and tea. Which one? It's not stationery. It's not travel expenses. So it will have to go under miscellaneous or sundry expenses, whatever you see it as. So you will have it under your total, 53, and your sundry expenses. And then you have May the 15th, paid 45 to R. Gray. So you have May 15th, R. Gray. That will be a ledger account. So you will have, how much was it? $45 under your total, and then you're going under ledger account, 45. Now they said he's an accounts payable. So that means that your folio would be PL. And that's all you have to put because they did not put any number, page number or anything, as long as you have PL, purchases ledger, for your payables. So we have May 19th, gave a donation, May 19th, donation. Donation is not stationary or traveling, so we have another sundry. So after we put it in our total, which is $70, we put it under the sundry or sundry expenses. And then we have May 24th, received from an employee for personal copying. So this is one of these examples, very rare, but note they did not say you made a payment. It's a receipt. So once you see receipt, photocopying, it does have to still follow the rules and be put on the debit side. So you're not going to put it here because it is not a payment. This is for payments only. This is your credit side. So you go over on your debit side, under the receipts, $5. Note, because that is going to come into play as we move on and we balance, okay? So now we are on May 27th, paid cash refund of $15, J. Jones. So we have another J. Jones. So May 27th, J. Jones, $15, and we will go to the ledger account column, $15. And since he is a customer, that means he's a receivable, and that will be SL for sales ledger. And then we have May 29th, purchased folders, purchase. So this is also a payment, $28. Folders will fall under stationery, just like envelopes. So you will also put it under stationery. And then your last one, what they tell you, restore the Imprest. So they didn't say restore the Imprest at the end of the month. They actually have the end of the month is 31st of May, and they told you restore it, which means that we are going to now restore the Imprest at the end of the month. So we follow in their instructions. Here it is that I made it bigger for you to see because this is the most challenging part, which you can tell is not that challenging. So the first thing that we always do, whether you're restoring it before or after, is you're going to have to total because you need to find out how much you need to restore it by. And it's usually how much you spent. So you're going to add up your total, 273, add up each of your monetary columns in terms of the payments that was made in total. And you can just double check 53 plus 37 plus 123 plus 60 should also equal to the 273. So we finish with these columns and we are just dealing with your total. So they told you restore on May the 31st. So we are going to do exactly that. May 31st. You could have done it on this liner. I just do it like this, just visually to separate things, but you can do it on any line below this. All right, so May 31st, how do you restore? You receive cash from your main cashier. And when you receive cash, you will put it on this side. Now, we learned before that if you spent 273, that means you have to return or put back the 273. But in this example, note that we didn't just spend 273. We also got $5. So because we also received $5, that means we don't have to put back in that $5. That means that we're just going to have to put back in the 73 less the $5 because we already got it. You know, so we spent 273, but we also received the $5, and you don't want to go and pocket that money. So what you're going to do is the only amount you're going to have to put back is not the full 273 because we received $5 already. It will be 268. So when you look at it, 268 plus the $5 would have come up to the amount that was spent. It's just that we got back. Now, most examples, the majority, like 99.99999%, they don't have a receipt. But you know what to do just in case. I'm just saying that, yes, it is usually as easy, 99.99999% of just reimbursing the amount that was spent. But just note, if you receive any money, doop, 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 remember that you have to take out that money received and reimburse the difference because you already received that. Okay, so you don't have to put back in that $5. Good. So now you have restored the Imprest. There are no more transactions. So what is the last thing you do for any account? Your balance. So you're going to balance May 31st, balance carried down. And since which side is greater? Is it the 273 or is it the receipt side? You have 1, 2, 3 amounts on this side. So it's obviously this side. So you're going to total. You have your totals and notice same line. And you add up the 400 plus the 5 plus the 268 and it will be 673 on both sides. And then your balance is always the missing figure. So if it's only 273 on this side, but your total is supposed to be 673, what is your missing figure? 673 minus 273, which will give you 400. And look at that. That means 400, your balance, you now have the float back in. Good, so now we have our balance, but you do not end there. You always have to bring down your balance. So you go below your totals. And what is the first date of the next month? After May is June. So you would have June 1st, balance brought down. And since the carry down was on the credit side, that means your brought down supposed to be on the debit side. So it will be entered here. And that means that you have your Imprest, your float restored to the 400. June the 1st, you now have $400 in your float to make your payments throughout June. So this is your answer for this. Notice I changed it from the red ink. You're not supposed to ever use red ink. Okay, so this is what it can look like in the exam if you want to use the different colors, blue and black, just emphasizing that. Okay, so you could always pause and look at this. And this is what we learned today in terms of the restoring. You can always just compare it, but it just has to do with timing. In end of month, you restore first, your balance after. Following month, your balance first and restore after. Okay, and that is all there is to it. And that is it for all the cash books.